Welcome everyone. Welcome to ANU Indonesia Project Global Global Seminar. My name is Arianto Patunru and I'm hosting this program with Nur Kamala Mulyani and Gema. We acknowledge the first Australians and pay our respect to elders past, present, and emerging. We are grateful for the support from the Australian National University and the Australian Department of Foreign Affairs and Trade. Today we have a very interesting topic, and that's accelerated digital adoption during COVID-19 pandemic. And our speaker is Andjarsari Paramaditha, or Deta. She's an economist at the Mandiri Institute. She studied at Universitas Indonesia and Tufts University. And as usual, we will have question and answer session after the talks. But if you want, you can write your question anytime on the Q&A box, not on the chat box, and we will attend to them in the Q&A session. Please also kindly fill a little polling when it appears on your screen, and we need this to improve our series. So without further ado, let me call Deta to start her presentation. Over to you, Deta.
Thank you, Bapak Arianto Patunru. Bapak Ibu, ladies and gentlemen, good morning. Thank you for making time in your busy schedule this morning and attending this virtual webinar hosted by the Australian National University, Indonesia's project. It's an honor for me to be able to share with you in this forum today. Our topic, as Bapak Ajo already mentioned, is on the accelerated digital adoption during the COVID-19 pandemic in Indonesia. So hopefully this topic would be an insightful and fruitful session for all of us. So let me begin to share the presentation by sharing the screen. Okay. So Bapak Ibu, before the global pandemic came in Indonesia, there's already an excitement about the rapid digital adoption in Indonesia. So as you can see in most of Asian country, digital adaptation is proven quite fast. And people are more easily adapting into the technology along with the development and innovation in the part of this world, and Indonesia is not excluded. While in 2011, there's only 13% of the adult population aged 15 years or more that has access to internet. By 2019, there's more than half of the population that have already access to internet. And similar to what we observe elsewhere, the rapid adaptation of the internet has also propelled the so-called digital economy. So we see that in Indonesia, e-commerce take a large share of the potential digital economy by value, followed by traveling, food and transport, and also for media or social media. Now, more consumers are now familiar with the shopping online, even for those who traditionally does offline shopping, such as for fashion and groceries. And on the supply side, business has also changed and adapted their process through digital channels. Google Temasek and Bain had estimate suggest that the gross merchandise value of e-commerce in Indonesia is expected to have increased yearly by 54% in 2020. However, despite of the progress of the extending across its region, Indonesia still faces challenges in making internet more inclusive. The Susanas data shows significant income disparities in the internet access. So individual with the top 10 richest of the income distribution are 3 times more likely to be connected to the internet than adults in the poorest decile, whom only around 27% are connected. So this sharp income gradient points to a possibly affordability constraint in the internet access. Is also shown in the substantial employment gap as well. We also see that formal workers working as employers or employee also have 3 times more likely to be connected than the free laborers. Okay. When the pandemic has created tumult for almost 2 years, it even amplified the acceleration as it becomes a game changer for consumers and also for businesses. Now, we have witnessed how digital adoption has been accelerated faster. The data shows that by 2021, around 72% of the population own smartphones, or the number is equivalent to around 150 million people. Compared to 4 years ago, smartphone adoption was already increased by 28%, or like around 64% proportionally. The smartphone usage is also associated with the increased internet access. So by 2022, we expect that there's going to be around 211 million people that would have used the internet, suggesting that around 3/4 of the population of the world would be have connected to digital world. And during this pandemic, Bapak Ibu, digital technologies have also helped us navigate the worst public health crisis in our lifetimes. So business at any scale and public sector have also flocked to digital technology to manage their activities amid mobility restriction. Services which traditionally seen to have personal interaction, such as education, health service, now also can be conducted remotely. Now, during the PPKM Darurat, for instance, in Indonesia, the spending on goods remains strong compared to services. We also see that consumers spend more on goods and necessities, such as food and beverages, clothing, housing-related products. And on the service side, communication, hotels, and leisure, we also see like more pressure during the stricter restriction. Spending on clothes also fell significantly because people don't really go out of the house during the restriction, and also during due to mall closure and work from home policy as well. Meanwhile, the portion of spending on medical and health has took a higher share than previous period. Okay, and however, we also see that part of the rapid spending recovery can also be attributed to the adaptive consumer and businesses, particularly to small businesses. As mentioned from the last slide, the COVID pandemic has also reshaped consumer behaviors and attitudes in Indonesia. Now, more consumers are more familiar with shopping online, even for traditionally offline shopping, such as fashion and groceries. From the spending data compiled by Bank Mandiri throughout 2020 to 2021, we see that the spending and the COVID-19 cases are closely interacted. The peaks of Mandiri Spending Index, an index that is created to track and estimate Indonesian consumer spending behavior, have also been in line with the height of COVID-19 cases in Indonesia. For instance, it took 5 weeks between the peak of MSI and COVID-19 cases in the first wave. Meanwhile, the distance between the MSI peak and the highest weekly COVID-19 cases was 12 weeks in the latest wave. Now, the Delta variant of COVID-19 explosion and the new social restriction, which in Indonesia we call PPKM Darurat, were seen behind the dynamic of the spending as well. Spending has dropped to the lowest level since January 2021, with the MSI fell around 27% below pre-pandemic levels for 4 consecutive weeks since the restriction was implemented.
Sorry,
However,
Data. Can I
yes,
ask you a very quick question, just clarification?
yes.
So this Mandiri spending index, is it based on actual spending or more like the consumer confidence index?
So we actually have a big data from our internal data that track these spendings. It's being how do you say? It's being collected by a part of our businesses called the electronic data management site, and it's tracking on a weekly basis actually. So it is almost how do you say? It is almost going in line with um, uh, the we usually benchmark it with the Bank Indonesia Consumer Confidence Index as well.
Okay, all right.
So it's like a more live track rather than
Right.
yeah.
And are they mostly on the digital spending? I mean, e-commerce based spending or also traditional spending?
We
Are they
mostly track.
online all?
Yeah, we basically mostly track them from the transaction side. So it not only include the e-commerce side,
So
but
both.
also a banking transaction, which is from our EDC side, if you're using the debit card and the credit card, and also transfers.
Okay, all right. Thanks.
Okay, so can I continue now?
Sure.
Okay, yeah. So yeah, the Delta variant of the COVID-19 explosion and the new social restriction, known as PPKM Darurat, was seen behind the dynamics. So the MSI fell around 27% below the pre-pandemic level for almost a month since the restriction was implemented. But we also observed that the post-restriction period, the spending tends to recover quickly around along the with the gradual restriction easing since the end of July 2020. So by mid of September, MSI has also returned to the positive level, and currently now it's above 4% of the pre-pandemic levels. Okay, and the accelerated digital economy has also been supported by growth in digital infrastructure and government policies. Now, most Indonesians connect to the internet using mobile devices. So mobile broadband infrastructure plays a very critical role in the technology development. Access to the internet by mobile technologies such as smartphone is most common at 98%. Meanwhile, those who has access by laptop and desktop are still very few at around 13.5%. But this number could also grow more in the future, along with the adaptation towards work or school from home in Indonesia. Most of Indonesians access the internet through their mobile phones. So the latest mobile broadband technology is a critical component for delivering the promise of the digital economy in Indonesia. These numbers reflect the central role of the investment growth by major mobile network operators. And in the last decade, these major mobile companies such as Telkomsel, Indosat, XL Axiata, or Smartfren has accelerated the development of the BTS or base transceiver stations, which are equipped with 4G or LTE technologies. On the other hand, this broadband or fiber to the home service is also being used by the very small segment of the population. Um, and the innovation in IT has also yielded affordable telecommunication devices. So, in the addition of the expansion of the infrastructure supporting with the mobile phones, such as BTS Tower, it also would help to enable millions of the population to connect to the internet and has extended mobile service among the population. The data suggests that around 45% of the villages or municipalities have BTS, and most of them now also has at least 3G coverage. Now, mobile broadband industry continues to expand their mobile infrastructures. Also, the government policy on Palaparing project also has lowered the cost of the access, accessing the internet. So this effort plays a significant role in accelerating the digital adoption in Indonesia. Okay, next. Now, along with the rapid development in digitalization, banking sector now also follows suit and revamping its business model by offering a more digital services through their super apps. As the pandemic hit the world, both consumer and businesses are forced to adapt and adjust to their service, including in accessing these financial needs. So financial institution has also adapted their service by providing more digital services. Digital banking application are now part of the front line in the banking service industry, and banks now allow customer to open an account without even visiting a bank branch. So this digital transaction has also recorded a historically high in the adaptation as well. This also resulted as an exponential increase in the digital bank valuation and the new account created by the consumers. Now, numerous existing banks have also started to transform their services into a whole integrated digital ecosystem. Hence, it's provide the consumers with the fullest customer banking experience through the super apps that they have also created. This is marked by the increasing number of the fully digital banks that have been or are currently on their way to be established. Now, since banks have flocked to digital services through their super apps, numerous existing bank has also started transforming their services into a whole integrated digital ecosystem and providing consumer with the fullest customer banking experience. These super apps such as Livin by Bank Mandiri, Digibank by DBS and such has offered a more seamless and interoperable financial service. It can connect banking transaction with a bigger financial ecosystem such as e-wallet, investment application, fintech, or e-commerce platform and insurance. Now, this digitalization in banking is also marked by the increasing number for full digital bank that going to be launched in Indonesia as well as the worldwide. Okay. Now, being a game changer, we see that full digital banks operate without infrastructure, physical infrastructure. They could potentially generate higher revenues due to the less operational cost than traditional banks. These full digital banks that operates on digital platform can enable their consumer to have a faster service, personalization, and real-time updates. These banks will operate without physical infrastructure. Hence, it may generate higher revenues with lower operational costs as opposed to the traditional banks. Given that they have a totally different digital sector. The full digital bank can reach networks of business and customers and generate increasing benefits in data and knowledge as well. So we look into several different parameters of digital bank licenses in Indonesia with others digital bank from Asian countries. So financial authorities that started to issue full digital bank licenses, such as China, is the first country that introduces such service in Asia with its Ant Financial Services, JD Finance, and Tencent Financials. In 2019, the Hong Kong Monetary Authority also granted 8 virtual banking licenses, of which most went to the technology and startup companies. Meanwhile, last year, Singapore also awarded around 4 digital bank licenses to Ant Financial, C Limited, and 2 other big consortium backed by a startup and investment fund. Now, as reported by McKinsey, there's also around 30 digital banks operating in the Asia Pacific. In addition, Malaysia and also Philippines are finalizing the frameworks and guidelines for this digital bank licensing. This objective creates a targeted market for digital banks to enable them to grow faster in terms of revenue and customer. Now, the interesting part, in Indonesia, we have also followed the trend to introduce this digital banking license by issuing a POJK regulation number 12 this year in August 2021. So as a result, Indonesian startup company have anticipated that this new regulation by acquiring small traditional banks. Taking an existing bank is considered cheaper and faster. So this strategy that facilitates both domestic and international investor who wants to test the digital banking market becomes more open. GoTo, which is previously known as Gojek, has the biggest unicorn in Indonesia, has taken over Bank Artos through around 2015 billion acquisition and aims to transform the bank into a fully digital bank services. The traditional banks such as Bank Sentral Asia also followed the same strategy by acquisitioning Bank Royal in November last year. Now, similar to the likes of the traditional bank, a fully digital bank is a deposit-taking institution that offers banking service to the customers. What really makes it different between the two is that full digital banks operates on digital platforms, enabling consumer to obtain faster service, personalization, and also real-time updates. Now, from the industry perspective, the competition between these traditional banks and fintechs will remains. However, both entities would find a point where they should work together and create a healthy and resilient financial industry. For example, a fintech could learn how banks manage financial and operational risk. Concurrently, banks also could learn how fintech innovate and create benefits from the digital transaction. Now, what is more important is how the industry understands Indonesia's market. We are indeed the biggest market in ASEAN, but currently digital and internet literacy in Indonesia are dominated by the middle to high income group. So there's a significant difference between the urban and suburb indicators as well. Therefore, the investors of digital banks in Indonesia should really go extra mile in educating the low access people and the SMEs. If they are able to do this, we can expect a digital bank to improve financial literacy and the financial inclusion. And we can expect that the fully digital banks would provide economic benefits to the underserved people and the business. allow me to take a quick water break. Okay. Now, along with the innovations, consumer and business are more comfortable in doing electronics and non-cash transactions. So as financial technology are more developed and consumer more confident to conduct transaction, we saw significant increase of the electronic transaction. Now, online shopping has become a new norm and has been accelerating since the PSBB implemented last year. So we see that the top-up rates in some major e-wallets such as OVO, GoPay, Dana, Shopee Pay, and Link Aja, and also Tokopedia has also started to increase in May last year as they went up around 6%. Now, the increasing usage of these e-wallets indicates that there's more online shopping activities that's being done through various trading platforms. So this growing trend is accelerated as the PSBB, the second PSBB is implemented in September last year. And during the PPKM Darurat, which was done a few months back, the top-up rate has even raised higher and peaked in last September, which is almost around 96% higher than the baseline. So in the recent month, the online shopping has also continued to grow with outside Java experiencing faster growth. The growth of e-wallet balance top-up in non-Java regions in September was higher than in Java. The growth rate in Maluku and Papua, Sumatra, Sulawesi, and Bali has also doubled during this period. So the convenience of this e-commerce platform of having more choices and improved logistic services has also made it easier for the household outside Java to access goods from elsewhere, especially from Java. So this also indicates that the household of the non-Java areas were savvier in optimizing online shopping than those in Java. We also see that the acceleration in adapting towards non-cash transactions are incremental, including the transaction related to the public service payments. Service offered by the public sector, which were previously operated at a very local level, are now being superseded by the remote delivery mechanism as digital technology has been a key in public service in delivery reforms. So the objective of the government more inclusive, efficient, and accountable has been a reason for transforming the governance into a digital governance as well. While our country, including Indonesia, are still experimenting with the digital governance, we see that the key success to reform depends on whether the delivery of public service has improved also around this dimension. From the data, we also see that the more people pay for public services through the digital channel as well. Digital payment for public services has increased by more than threefold in 2021. Online payment for one-stop administration service office or SAMSAT, which is the office that provide public service related to local tax and administration on vehicles has increased more than 4 times compared to January in 2019. Tax payment through online channels has also increased significantly by 3.7 times compared to the same period. So the expanded digital channels for these public service payments from the new initiative of the government to digitalize their services. The pandemic has limited interactions between the public officials and consumers, has also become a part that accelerates the transition towards these digital public services. Now, The digitalization of the financial sector would also provide financial services to the underserved groups. And hopefully it will giving them more access to access financial services that can serve their needs. In the last few years, Indonesia has made significant progress in financial inclusion, which the adult population of those age 15 years or more uh, has an account, banking account has also increased dramatically. This digitalized G2P social assistance programs is another potential area for digitalization of public services. Now, most of the social assistance programs has also been channeled through cash and card-based methods. Now, the government has also aimed to use fintech, which the recipient only need to visit them with the facial scanning technology or like biometrics that is used to verify their identity as well. Furthermore, the government has also planned to use facial recognition technology for the 3 kilogram LPG subsidy. Now, despite of the progress, most of the population in Indonesia is still unbanked. So around 60% of people do not have a bank account at any formal financial institution. So in extending bank branches to the geographically challenging areas, it will be a less cost effective options actually for the channeling bank. So instead, the recent digital innovation in financial sector would potentially open opportunities to provide such services all over the countries. With the success of digital social program, it would highly depend on the readiness of the welfare recipient as well. We see that 40% of the welfare recipient has access to internet, but the internet is used mainly for leisure related activities. So around almost 90% of the recipient still using it for social media. Meanwhile, only a fraction are using the internet for more productive activities such as e-commerce or banking. Now, the digitalization of social assistance distribution um, is really targeted to reach the underserved group of the poor and fragile um, groups, income groups. So as part of Indonesia's economic recovery program or PAN, the government of Indonesia also aimed to distribute social transfer in cashless manners. So the types of social assistance in Indonesia that have been or can be transferred digitally includes PKH, BNPT or Kartu Sembako, Kartu Prakerja, the fuel and electricity subsidy, fertilizer and farmer subsidy, supporting program for MSME and also home industry. So this social transfer can be delivered through savings accounts or e-wallet, and the fund can be used in transactions in bank branches, agent banking, merchants, or ATMs. Now, the ecosystem of the digital social transfer composed of banking industry, such as agent banking, merchants, digital wallet, digital payment application or fintech, and also e-commerce. It also now included e-learning platform for Kartu Prakerja, which was released around last year's. Hence, banking and financial industry must be able to provide seamless transaction in the service within the ecosystem to ensure the fund is being channeled properly. So we see that subsidized should be shifted from goods to non-cash subsidies. and it should be direct to beneficiaries' household and families. It should be given directly to the eligible beneficiaries through the banking system, and the authorization process can be using with the biometrics technology. The use of digital technology on the social assistance programs could also minimize leakage, and it would be more cost effective than the existing mechanism. So the distribution is carried out online so that it can save cost, it can minimize corruption, and also increase money circulation transaction in the local economy in terms of the areas of beneficiaries such as merchant and agent banking. Okay. Now, however, there are still some significant challenges in the digital distribution of social assistance program in Indonesia, because we wanted to make sure that nobody is left behind. We still need to understand the beneficiary financial needs and try to integrate them into the digital banking and financial services. It is important that this digitalization of the social program would keep the program to be sustainable, secure, inclusive, easy to access, and compatible with the beneficiaries' needs. The challenges that potentially prevent us from tapping the benefits ranges from the infrastructure to cybersecurity, to an inclusive social assistance framework that would leave nobody behind. So resolving a structural problem in digitalizing the social assistance program should be start by fixing the basic prerequisites for the digitalization. In this case, it would also include transportation and telco infrastructure, national digital IDs, mobile devices that's being used, financial literacy, and also access to financial services. Um, we also need accurate, reliable, and integrated national database of the beneficiaries, which is crucial to a more efficient social transfer. Data securities and confidentiality continues to be a major problem in Indonesia because we don't have a robust KYC infrastructure yet. And there's also have been cases of data breaching, which could erode consumer trust to the program and digital technology. Now, in the light of the pandemic, we also see that the government should also anticipate with the expansion of the beneficiary database to 60 or 70% of the population, should an automatic stabilizer in the future is needed. So Indonesia needs to have a better ecosystem as well for the distribution of the digital social assistance, so that the e-wallet can also be connected with the MSME or the EQB and the merchants that can make a non-cash payment more easily and efficiently. So social assistance program should also allocated as a digitalized direct cash transfer to the beneficiary, as we see that this mechanism is something that we believe most efficient. Now, on the MSME side, we see that we should also pay attention that the MSME digital adaptation accelerates as it increase new customer segmentation, and it also embraces towards non-cash transaction. So last year, Mandiri Institute research on MSME found that at the early stage of the pandemic, around 37 million MSME that provide almost 60 million of jobs were significantly at risk. So the hardship encountered by small business originally stemmed from the supply side. Yet, as social distancing policy has becoming more stringent, the demand side pressure on the SMSE has a longer lasting impact as well. So Indonesia small businesses contribute almost 60% of the national output, and their workers account of around 43% of the employment. By using the BPS data, Mandiri Institute also estimate that last year there's around 50 million MSME in Indonesia, of which virtually of them are micro and small businesses, which is more than 90%, and most of them are operated in informal sector. As found in many countries, MSME in Indonesia has also been the backbone of the job creation. However, with the digital technology expanded in this market, the online platform also plays a critical role in encouraging the small business to adopt to digital technologies or the internet. So streamlining the procedures in opening online store would significantly benefit the small businesses with the limited internet skills. Consumers are also more aware of the price differences in the online market. Hence, the online platform might find it in their interest as well to partner with the warehouses and logistic couriers. Now, this would also reduce the transportation costs and ease the logistic hassles. But despite of the potential benefit, the digital adaptation has improved, but still remain quite low. The low adoption is driven by the low adaptation of the internet among informal small businesses. This may reflect the digital divide between the formal and informal sectors in Indonesia. And in addition, the nature of businesses may differ between those two kinds of small businesses. But nevertheless, the internet adaptation are among this informal small business has still grew quite rapidly, which also may offer hope that we will catch up with those in the formal sector as well. So access to finance is critical for these small businesses, and digital technology has the potential to accelerate financial access among the small businesses. Rapid innovation in information technology has also led to the growing innovation in financial services. For example, digital financial providers offer electronic money without requiring the account holder to have a bank account. As the result, the potential to unleash financial service access to MSME would also be greater. Now, I want to end the presentation by saying that by digitalization of the financial services, Indonesia would try to keep its promise to create a more inclusive financial service. As we also have seen in the best practices in other parts of the world, a more inclusive access to finance is the key to unlock productivity gains and economic growth, which hopefully would increase the prosperity of the Indonesian people. So that was all my presentation. So thank you for your time and attention during this presentation. I'm handling back the time and place to the moderator for our further discussion. Thank you.
Thank you, Deta. Very comprehensive and very interesting study. I see we already have some questions posted, and let me ask them if they want to ask their questions directly. So first, I see here James Bartle. James, would you like to ask your question directly?
Can you hear me?
Yes, we can. Go ahead.
Okay. I'm actually a finance academic and consultant who lives in Jakarta, and so I experienced to some extent the digitalization in Indonesia, and I think there's good digitalisation and bad digitalisation. And to some extent, it depends on motivation. So if you look at education, which you talked about earlier on, it was forced onto education providers by the pandemic. And for a lot of people, it was a failure because it just meant putting classes on Zoom lectures and things like that. And they weren't very effective. So there was a motivation. But when we come to the banking sector, a lot of it, again, depends on motivation. So you get the fintech companies like Tokopedia and so on, who focus on customer experience. So everything is easy. If you actually look at a lot of the banking digitalization, it's for the bank's internal cost saving. So what you see on your phone is not necessarily easy to use. It's there for the bank. It's not actually there for you. So I'm wondering what your comment would be on that, is that there's actually good motivation for digitalization and there's bad motivation for digitalization.
Thanks, James. Data, over to you.
Yeah, I think this pandemic has really accelerated everything, and it also amplify on how as you mentioned earlier, the motivation and also the needs of the consumer. I have to agree with you that sometimes the customer experience is not always an easy thing to adapt, but it also I think an expedite learning process for every stakeholder from the industry sectors and also for the consumer sector. So I think we are still finding a sweet spot between these two major stakeholder in how to navigate through this. So with the development for what I mentioned before, the super apps and everything, we are also still monitoring on the adaptation of the consumer and the feedback from the consumer as well. And along the way, I think it's going to be a two-way process. From the consumer and or the customer, they would also need to have a better literacy in using the apps, so they would have an amplify digital and also financial literacy. On the other side, the traditional banks and also fintech and also the fully digital bank also would learn on how to make the customer experience is more seamless and also more adaptable in the future. And I think it's also goes with the regulators as well, as I think Bank of Indonesia and also OJK is also looking their way on how these are being implemented without sacrificing the security side or like data breach and such. Yes.
Okay. Thank you, Data. Next in line are Lolita, Iqbal Wahid, and Andrew. So let me start first with Lolita.
Hi, Madeta. How are you doing? So my question, I'm curious about your opinion in regards of the rapid development of Indonesia is quite different with other countries. In Africa, for example, they're still using USSD rather than using a smartphone-based app. I know that you have mentioned that financial literacy are important, but I think we could see a lot of success in developing a good use cases for rural and poor people that could develop to digital adoption. So I want to know your take. What are the strengths and weaknesses for Indonesia to become a lot more advanced to other countries, but would that create problems for getting more rural and poor people in digital financial services? And how does this relate to what Bank Mandiri is doing in developing the segment?
Thank you, Loli. Go ahead, Deta.
Okay, thank you for your question, Lolita. It's a very valid question. We actually see, as I mentioned earlier in the presentation, we wanted to make sure that nobody is left behind during this process. And especially when you mentioned the rural and poor people, it's a very valid question. However, surprisingly, this segmentation has also access towards the smartphone as well. So usually there's one person in the family that has access to smartphone, and usually it's the head of a family at least. So we were hoping that again, this can be used as a proxy to cover them in the future. Although some of the population would still remain to be able to reach through digitalization, and we still have to serve them in a cash manners, or a direct transfers, or in terms of goods and services, because that's also what we have done in some parts of outer Indonesia. That sometimes the banking, the channeling bank, such as Bank Mandiri, has also worked together closely with the agent banking and the merchants in the local area in delivering these goods and services towards the outer parts of Indonesia. So it's going to be a continuous effort from our side, from the banking side as well. And I think a different approach that we have from, let's say, South Asian or also African countries, which is being pushed from the mobile or telco company instead of banking sectors. In Indonesia, we try to facilitate it through the fintech industry as well. So we are adapting towards that direction in the future.
Thanks, Deta. Thank you. Next, Iqbal Wahid.
Hello. I just have a quick question. As we know that because of the current pandemics, like everything has become cashless and stuff, it's become digitalized. Do you think that the effect of digitalization in financial sector will last after the pandemic?
Thank you, Iqbal.
Hi, Iqbal. Thank you for the question. I think the effect of the digitalization would not only last, but it would also amplify post the pandemic, because I think honestly, I don't think that it's going to be over quite soon enough. So again, like as more and more people are more comfortable in doing digital transaction, there are different takes and different adaptation or a new learning curve in each segment of the society. As we see, like the government pen programs, the national economy recovery programs has also quote unquote forced the social assistance to be delivered through cashless manners, but also on the upper tier, such as the higher income segment. The younger generation are more used to doing investment online, as we also see a new fintech investment application has also exponentially raised some investment from this retail segment, especially from the youngster. Super apps such as Bibit or Ajaib is now being adapted towards that segment. So I think going onwards, it will also make every layers of the society more financial literate and savvy, and digitally savvy.
Thanks, Data. Next is Andrew. Andrew just told me that his microphone is not working. So let me read his question. So bear with me. So in the last years, we've seen a number of high-profile breaches of personally identifiable information, or PII, in Indonesia. Some of them involves enough information for a wholesale identity theft, i.e. personal information that is usually required to open a bank account. So what are your thoughts regarding the risks of the accelerating speed of digitalization of the financial sector, which allows, as you mentioned, opening an account without setting foot in a physical building in an environment that is still poor, with still poor personal data protection? So yes, a poor personal data protection, not only at the data governance level, but also perhaps at technical know-how and about how to protect the PII data, or personally identifiable information. Any comment on this, Data?
Okay, thank you for the question, Andrew. Yeah, I think data security is one of the major concerns in Indonesia, especially as we're moving towards the biometric data, and I think it's still how do you say, uh, like the database for the let's say for the social assistance beneficiaries, there's going to be a lot of them, tons of them, and if the data is leaked, it's going to compromise the assurance of this participant in enrolling to the program. However, I think it's also need an orchestrated effort between uh, uh, the uh, the user as well, towards their financial literacy and digital literacy. Also, the safety measures from the industry, the financial industry, such as bank and fintech, who are collecting and accessing the data, as well as the government, who is basically the biggest stakeholder, the ones that are actually holding all of this digital data of the population in Indonesia. And also, I think there's also a need to improve on the reporting, like the pelaporan of the incident by fintech and such. So it also needs a major orchestrated security means between this governance that might also include the police and other stakeholders as well.
Thank you. Next is Kali Rajan. Are you there? Do you want to ask your? Okay.
Yes.
Go ahead.
Yes, my dear. It's a very good, comprehensive summary of digitalization in Indonesia, not only in the banking sector, but also holding back. Thanks for that again.
Thank you.
I have two questions. Only one I raised there, and then second one, just I was thinking immediately. The first one is, you mentioned that the online shopping is now flourishing like anything. And this is happening in most of the countries, in not only in ASEAN, but also in South Asia and everywhere. But then the problem is, you know, that you already mentioned that in the small businesses and micro family businesses, they are much affected by these things. So in some countries like India, the government is giving some subsidies in terms of reducing the utilities or various other things. So is there any other steps the government of Indonesia has been taking to look after them? That is the first question. The second one is, again, taking examples from India, say the digitization of the banking sector came in India, and their main purpose was to bring in the inclusiveness, to increase the inclusiveness. And because of that, there are so many accounts are open, but not all are operative. Just for the sake of increasing the number of accounts, they increase, and then the government published the data saying that, okay, so many digitization. So is there any kind of difficulties do you observe in Indonesia too? Thanks very much. Thank you. It's a nice presentation.
Thank you, Kali.
Yeah.
Kali is a professor at ANU here.
Oh, hi, Mr. Kali. Thank you for the questions. Okay, I try to answer it one by one. I think, as you mentioned, in India, there's a lot of dormant account with the implementation of the social assistance channeling, digitalized social assistant channeling. I think around in 2014 or 2015, which Indonesia actually uses that as a best practices as well. But I think with this dormant account in Indonesia, this pandemic has already accelerated because, to be honest, it's not just only for the even for the poor and the vulnerables in Indonesia. With the pandemic, we have a school from home and work from home, so they are being forced into adapting to this digital practices, and hopefully this would also help them in adapting towards the digital financial literacy as well. So yes, it might have we might have a dormant account in the past, but with the channeling of the social assistance through the pen, as I mentioned earlier, in PKH, and also for the Kartu Sembako and BNPT and Kartu Prakerja, especially for Kartu Prakerja, which is being targeted to the job seeker, which would have a better literacy. This dormant account would be used more actively, or if not, then at least the digital transaction is being done in a more frequent way. We also see the acceleration of using CRIS or like a QR code in Indonesia in payment system. So those kind of things we see has been adapted in South Korea since 2 or 3 years ago, but now it's becoming more and more popular in Indonesia. So you can actually see small businesses such as we say tukang bubur in Indonesia, or like the street vendors is using those kind of payment methods. And I hope it also would bridge your question on the MSME programs. So the government of Indonesia is also still channeling a low interest core program to help this small businesses in trying to survive during the pandemic. The details would be again in our economic national economic recovery program. They're also offering lower or tax cut. So it also would amplify these small businesses to do better accounting bookings in the future, which then would also help them to adapt towards access to the e-commerce platform. I think the government of Indonesia also working closely together with Tokopedia, Bukalapak, and other e-commerce platform in helping creating programs, whether it's on a capacity building or selling those their products and also delivering their products, because they're also working with the logistic company in sending over their products throughout Indonesia. So I think again that's a highly orchestrated effort between the government, fintech company, and also banking industry in helping these small businesses to not just surviving this pandemic, but also expanding their market options in the future. I hope that explains.
Thank you, Deta. I see another question from my good friend in Beijing, Sherry Tao Kong. Sherry, would you like to ask directly?
Yes, please. Thank you very much. Thank you, Ibu Deta, for a very informative presentation. This is fascinating. I was thinking to ask you to say a few words about what you think about the ambitions of these fintech companies as well as the platforms. So do you think they have intention to develop into a full-fledged digital financial ecosystem, you know, providing a whole range of services goes far beyond what they are doing now, yeah? And also, what's the implication for the traditional financial institutions? Does it push them to be digitalized? It gives them the impetus to match up with what fintech is doing. And on the other hand, what are the challenges of the regulators? Thank you very much.
Thanks, Sherry. Go ahead, Deta.
Hi, Sherry. Thank you for the questions. Wow, it's a very interesting and hard to predict questions actually about the ambition of fintech companies. But yes, I think fintech companies has also been given ample of room in developing their products. As we see with the presentation that you know, a lot of fintech company, whether it's Gojek, that is based on used to based on a transportation company, now is already acquiring bank to and converted into Bank Jago, which gives a financial solution and create a more seamless experience in their ecosystem. So the ambition is pretty much limitless. We also would see a very interesting things that would happen next year as GoTo is trying to do an IPO, as well as other startup companies such as Traveloka or Ticket.com or Blibli. So it's going to be a very interesting on how they would, you know, try to tap to this market, as well as going to contribute to our financial deepening as well. But again, I think their ambition has to go hand in hand with the government regulation. And as we all know, that government or regulation will follow suits on, you know, the trends of the markets and how it's going to affect it in the future. So I think we are trying to make the country more digitally savvy, but we also learn a lot from, for instance, China, which has issues with shadow banking, and also having issues with securities and the practices in their fintech companies. So we want to avoid that from happening as well. For your question of the implication of how this is going to affect the traditional companies or sectors. Again, being traditional means that they need to catch up and also do adaptation towards this digitalization, because it's really inevitable. But for the banking sector itself, I think for the prominent banks, they would also have two focuses. One is towards surfacing the retail side, and it can be more digitalized, which, as I mentioned in my presentation earlier, it's taking into a more retail sector's side, but we also need to service our corporate side better. So I think for the traditional bank, which have a stronger foot, would consider in surfacing this corporate side through the investment banking and channeling to a bigger multinational companies and such. Hope that explains.
Thank you, Deta. I don't see other questions. So if anybody has more questions, please just write your question or raise your hand, virtual hand, so I can see. While waiting for those, let me ask one question to you, Deta. So one of your recommendations was streamlining the procedures for opening online store, right? I wonder how difficult it is now. So if I want to, if I'm from small business and I want to open an online store, for example, how do I do it? How do I have to deal with OJK or other institutions? Can you give illustration of how difficult it is?
Frankly, I don't really have experience with that, but it is mostly working from the vendor side with the so-called platform. So let's say if you're applying your store to the Tokopedia or to the Bukalapak, they would have the assessment from their side. So opening a store is one thing, and then receiving
Payment.
Payment and everything, they would have to have another process that is like really individually between the user and also with the platform. But also, if I may mention, the government is also giving a subsidy throughout this e-commerce platform, right? So usually, the store has to be open for a good period of time. It used to be around 2 years, but now it can be reduced to, I think, around 6 months to 1 year. So then you can actually apply for a type of KUR or a low interest
Subsidy.
rate, subsidy, which is being channeled or being orchestrated by this e-commerce platform, and also through I think Kemenkeu as well. So there's going to be that kind of how do you say, that kind of arrangement between the e-commerce platform. And I think from the transaction itself, it also each of the e-commerce platform could track the transaction, whether it's whether the store is having a good star rate, or there's a lot of complaints. So it's being tracked quite well, and part of the process of the applying for this pinjaman or the core.
Are there many instances where people just do online transactions based on personal connections via social media? For example, I just put them in Instagram with my bank account. Are there many of these? And what do regulators like OJK think about this? Is this something that they want to tap or just let it flourish by itself?
I think again, like nowadays, consumer are more savvy. Although some of us are still trying to doing this transaction based on a personal recommendation or closeness. But in these stores, if you actually have a store in the e-commerce platform, they would have ratings. So sometimes if you wanted to buy something online from a store that you haven't really heard of, or a so-called an official store, you can see the ratings, and you can also see the comments or the reviews, and you can actually see whether the review or the comments is being manipulated or not. So also again, a learning experience for both user and also the e-commerce platform itself, because of course there's going to be a lot of gamification that could also hurt their profits and such. So again, it's still trying to find the balance of it all. And if the amount is not significant enough, I think the government would not step into that in a short while.
All right, thanks. I see a question from Lydia Napitupulu. Lydia, would you like to ask it directly? Yes, go ahead, Lydia.
Okay, thanks. Can you hear me?
Yes.
Yes.
Yes. Thanks for the presentation and the wealth of data. Thank you. Because you mentioned e-commerce and also Tokopedia in particular, I think one thing that we also notice is that sales of fake and bajakan goods are also on the increase. I mean, on the one hand, it's good for the economy. I see students are buying the copy bajakan books, but on the other hand, it is a violation of intellectual property rights, and probably will have repercussions for us in the future, where future brands don't want to enter Indonesia because of this problem. So is there something that the financial sector and the banking sector doing? Because I think you have some control over the flow of money, and you can stop if there are complaints. But I think channels for complaining also is not very well managed. Any comments on this? Thanks.
Yes, thank you for the question, Ibu Lydia. Again, I think it's a very valid question, and it also scares a lot of branded product to come into Indonesia because of that. But it's also something of a more advanced problem that we would need to handle. It's not only for the buku bajakan, but as you mentioned, like a pirated books, but also for pirated goods. We find that this is a fake. They're selling whatever fake Dior or such like that luxury brand. So I think one of the methods that can be used is towards the reporting to the e-commerce platform, and I think some of the reviews can also kind of express that you shouldn't be buying from the store and etc. I think in a bigger framework, government haven't really been able to do a lot of things about it. And also, I think there's also issues when we import a lot of goods from China. That's being, a ship towards a certain e-commerce that can facilitate that. But again, this kind of a distribution a process and everything, is still, I think still a bit far-fetched from the government sides and also for the financial side. However, I think going onwards, as this concern increases, there might be some sort of how do you say, actions that can be done, whether it's towards a sort of punishment or also raising a tax issues, or red flags, something like that. So I think that can be discussed. Again, depends on how this issues is going to be snowballing in the future as well, whether it's going to be significant as well.
Thank you, Deta. I don't see any other question. And so let me thank you again for the wonderful presentations. And also I'd like to thank all the participants for the lively discussion. So now let me hand this back over to Nuke, who may have some announcement for what is coming next in our series. Go ahead, Nuke.
Thank you, Acho and Deta. If you're interested in the digitalization topics, then our next two seminars, next week and the week after, will be on the digital. We'll have digital topics. Next week we'll have the Indonesia study group, and the topic is cyber truth, social media propaganda, and the future of Indonesian democracy. That's with Pak Wijayanto and Pak Ismail Fahmi. That's going to be very fast. They will tell a fascinating story as well. And the one after that will be on the digital merchant.
And it will be on the gender insight of digital merchandise, right?
That's right. Yes, with Maria Monica Wiharja from the World Bank. And with that, I will end the seminar. Thank you, Deta.
Thank you, Deta.
My pleasure. Thank you for having me.
Thank you.